Good afternoon, guys. Thursday, 22nd of January. Afternoon session. We're starting to pick off pretty good off of this morning's smackdown. Gained back about, not quite half yet, with the Dow down 143, S&P futures off 14, NASDAQ futures off 13.5, Russell down about 12.5 points. This market just isn't tradable. You got Tuesday down 350, yesterday up 279, today down over 200, but climbing. It's not a tradable market. I don't care which side of the trend you get on, the next day you're going to be on the wrong side of it. Over and over again, we're locked in the range. The only good thing I can say about the Dow is it is holding that last important diatonic down at the 8,024 level. 5 tests of that now in the last 5 consecutive sessions. One thing that's standing out, which somebody just mentioned in the live room, and I've been watching for a few minutes, is good old Goldie, Goldman Sachs, green on a day where everything else is red, and you might say, well, financials in general should be good, but they're not. It's only Goldman that's green. The first thing that Goldman has to deal with here is the gap down from the 20th of January, where it sunk into the high 50s. Nice climb out of it over the last 2 sessions, especially today. Besides the gap, which is going to be about the $73.38 area, we have the 50-day simple moving average also to be cracked through, and then we could talk about the 20-day moving average. Other indicators, money stream is up and through the rope now on Goldman Sachs. Rate of change is pretty vertical. Time segmented volume coming up to cross that zero latitude line. Excellent, excellent volume yesterday, which I didn't really notice until today, but that volume's the highest since, well, it would be mid-December of 2007. Something interesting is going on with Goldman Sachs. We'll put support at yesterday's lows down around the $63.80 area on Goldman Sachs for support. We got the gap fill, which is 2 points above here. The first diatonic that has to be dealt with after that gap fill would take us up to the $77.37 area. Final diatonic, and this would be over a week or 2 weeks, up at 86.68 for a fairly decent swing trade if Goldman holds the formation that's been put in today and yesterday. So 2 points, 5 points, ultimately 15 points on a Goldman swing trade, depending how much patience you have. Again, Goldman is standing out from the pack because most of the other financials I'm looking at are red. We'll take a look at the April. Let's open interest-wise. Let's go with the April $70 calls. April 70s on Goldman Sachs. That symbol GSDN. GSDN for that call on Goldman. The last trade on that car, $12.80. That's about the best thing I see for today. I won't even take credit for it because one of you pikers on the live channel gave me the heads up on it. I don't know what to make of these indices other than what I said in my opening inane drivel. We've got 5 days of a test in the same area. It seems to be holding. And other than that, it's just whipsaw. A few hundred points up, a few hundred points down. You got to play it close to the vest or pick one out of a pack that might be looking good. Those of you that are getting all giddy over Apple, I'd caution you not to hold it too tight. Yeah, it's doing great today, but go back and look at last January and see what happened after the initial pop. So there's a trade for today. Goldman looks good. I am King Cambo. Smoke 'em if you got 'em. And that's how I roll for Thursday, 22nd of January, 2009.